Hi, friends. I'm Frank the Bank, the founder and owner of Lincoln Lending Group for the last 20 years right here in Tampa, Florida. Today, I'd like to take a moment and dispel the 5 biggest myths regarding reverse mortgage loans. I'd like to start by asking you to forget everything you've ever heard or ever known about a reverse mortgage. You see, the reverse mortgage loan was changed roughly 10 years ago to ensure that no one ever loses their home ever again. Let's take a moment and discuss the 5 biggest myths regarding reverse mortgages. Myth number 1. You no longer own your home when you close on a reverse mortgage. The bank owns your home. Absolutely not true. A reverse mortgage is a regular mortgage. There's really no difference in a reverse mortgage on your home than there is a forward mortgage. Although we don't call regular mortgages forward mortgages, we just call them mortgage loans. But when you have a reverse mortgage on your house, it's just a regular old loan. Myth number 2, it's possible to lose your home when you have a reverse mortgage. Now this one, I want to take a moment for. First of all, it's absolutely not true. Remember, I said you still own your home when you have a reverse mortgage, right? Well, what happened a long time ago, prior to 2014, was people did lose their homes. And how it happened was not everybody lost their home, but in certain situations, there could be a situation where the husband, for example, could pass away before the wife. And a lot of times, for even example, in my own house, most of the mortgages that I have are in my name, not in my wife's name. So prior to 2014, if you took out a reverse mortgage, you could choose whether you wanted to put it in your name as the husband or your wife's name as the wife. And unfortunately, if something happened to one or the other, and the mortgage was in that person's name, and the house had no equity, and the wife couldn't qualify for any type of financing, or the husband, whoever the widow is, then it is possible for them to lose their home. The bank would sometimes take the home because they couldn't refinance. So for example, in a reverse mortgage, if your balance increases every month, and let's say the market takes a dive and the equity goes down, the house could end up being underwater, and that is how people lost their homes. Now the good news. The good news is in 2014, HUD, the Department of Housing and Urban Development, decided that they would make a change so this would happen to no one ever again. When you apply for a reverse mortgage past 2014, 10 years ago, we will have to qualify the younger spouse. That means if you are 90 years old and your wife is 80 years old, we have to use your wife's age for the qualification. And the loan will go in both of your names. That way, if something unexpected happens to one of you before the other person, the surviving spouse, will live in that home for the rest of their life and get all of the benefits of the reverse mortgage for the rest of their life, no matter what the equity, no matter what happens to credit, no matter who dies first. So it is a completely solved problem. Myth number 3, you must be mortgage free in order to get a reverse mortgage. Now, this one makes me laugh a little bit because how many of us don't have a mortgage on our house? I mean, even my own grandmother, when she was 83 years old, still had a mortgage on her house. So for some reason, people have thought or were told that your house has to be free and clear. It has to be paid off. Absolutely not true. Most reverse mortgages are done on houses that still have a balance. You see, in a reverse mortgage, one of the main benefits is that you have no mortgage payment for the rest of your life. So how would that be a benefit to someone who already doesn't have a mortgage on their home? It wouldn't be. So most of the time, the main benefit is you get to pay off your existing mortgage. So let's say your payment is $1,500 a month on your existing mortgage. You no longer have that payment for the rest of your life, and you still own your home. Remember myth number 1. Myth number 4. You cannot sell or refinance your home, and you cannot leave it to your children if you have a reverse mortgage. So this is a bit of a 2-part myth. Number 1, you cannot sell or refinance your home. Well, absolutely you can, because a reverse mortgage is a regular mortgage. Remember, we went over that in myth number 1. It's your home. If you want to sell it 6 months after taking the reverse mortgage, no problem. If you want to leave your home to your children when you're gone, no problem. If there's equity in the home and your children would like that house, you absolutely can leave it to them. This is not anything different than a regular mortgage. As a matter of fact, someone the other day asked me a question. They said, Frank, what if I want to make a payment on a reverse mortgage? My answer was kind of funny. I said, well, first of all, I'm going to ask to talk to your primary care physician, and I'm going to recommend you for mental health counseling. Because why would you make a payment on a loan where it was specifically designed where you'd never have to make a payment for the rest of your life? Can you make one? Of course you can. Can you refinance? Of course you can. Can you sell? Of course you can. A reverse mortgage is not a jail sentence. It's actually a life sentence. It's a sentence that opens up the possibilities of what you can do in the best years of your life. Myth number 5, a reverse mortgage is a recourse loan. What is a recourse loan? A lot of people think when you take out a reverse mortgage and you leave this earth that the bank is going to take all the assets from your family. A lot of people think that when you have a reverse mortgage loan, and let's say the house is underwater, meaning you owe more on the house than the house is worth. They think that if they're leaving an inheritance to their family, their kids and their grandkids will not get that inheritance. That is actually the farthest from the truth. A reverse mortgage is what's called a non-recourse loan, which means it doesn't matter what assets you have, or if you're underwater, or if you have equity, your family will receive their inheritance and the house if you want them to have the house. And there's something really cool that was designed about 10 years ago as well with reverse mortgages. There's a new rule. It states that even if your house is completely underwater, let's say you owe $200,000 on the house and it's only worth $100,000. Well, that means you owe the bank $100,000 more than it's worth. It used to be that you would just give the house back to the bank and there would be no recourse against the inheritance, which is still the case. But now HUD has created a new rule. I call it the Save the Family House Act. I don't think that's the real name, but it makes a lot of sense. So for example, in my own grandmother's scenario, the house that she put a reverse mortgage on, we had in the family for over 70 years. The bank will give an option when you're gone to your family, to your next of kin that you're leaving the house to, that they can buy that house from the bank at a value of 5% under the current appraised value, regardless of what you owe on that house. So in my grandma's scenario, let's say she passed away and she owed $200,000 and the house was only worth $100,000. The bank would appraise it. It would come in at $100,000 and they would sell it to the family at $95,000. But you're saying, Frank, what happens to that $100,000 that's owed to the bank? Here's the beauty. A reverse mortgage is a HUD mortgage, which is the same people who do FHA. Does anybody know what FHA has on every single loan? Mortgage insurance, PMI. Those 3 bad letter words, PMI. Well, guess what? Mortgage insurance covers the lender. It doesn't cover you as a borrower. It covers the lender, which means the lender is going to get paid back all of that money. Even if it's $100,000, they're not going to lose anything. That's why they can sell you and or your family the house for 5% under the appraised value. In my specific grandma's situation, she was able to save money during the 10 years she had the reverse mortgage. She left money, unbeknownst to us, to the kids and grandkids, and her house was underwater. So I've personally experienced the non-recourse nature of the reverse mortgage loan. That is all today that I have about the 5 myths of reverse mortgage loans. I'm a firm believer that this is the greatest mortgage product ever created for people who are over 62 years old of age. If you're interested in finding out more, visit one of my sites, reverseguru.com or reversemortgagelife.com. I'm Frank the Bank, president of Lincoln Lending Group, your reverse mortgage guru.